Mohamed El-Erian joins us here at Post 9. Great to have you, Mohamed. Welcome.
Thanks for having me.
It is the weakest year of job growth outside of recession in 20-plus years. Is that okay?
It is okay for where we are in the cycle. In fact, relative to expectation, as Sarah said, there's something for everyone in this report, and it's no drama. And it reinforces the notion that Chair Powell has that we are well positioned to wait. The big issue in my mind is that increasingly we're seeing employment decoupled from output. And you had Kevin Hassett on earlier, and he said it's all about productivity, and it's going to raise three issues. One is who gets the benefits of this productivity? Does it go to companies, or does it go to the workers? And this is really important because the second issue is affordability. This is a real issue. It has economic, political, and social aspects. And then third, I think the inflation number next week is going to be even more important. So no drama relative to expectations, but it highlights these bigger issues that we're going to deal through this year.
Right. To your point about the fight between capital and labor, I mean, pre-tax margins on companies are near record highs, and the employee share of corporate income is close to multi-year lows. Correct. I think we know who's winning that fight.
But who's going to continue to win? So we have an opportunity now with the productivity gain to pass on more to the workers. And this becomes really important in terms of affordability. It's not just about prices. The focus of the administration about the price of energy, the price of mortgages we saw yesterday, the price of pharmaceutical. It's also about income, because that's what affordability is. It's prices and income. So that's going to be a critical issue, and it's going to play out not just in terms of the economics, but also in terms of the politics.
I mean, we did see wage growth in this report. Do you think it's just an indication that you said it depends where we are in the cycle, that we're late cycle and we're at full employment?
I think that at 4.4, we are near full employment, and we're seeing contraction in labor supply. So
right.
Yes, I think one of the issues that worries people like me is the labor force participation at 62.4. I'd like to see it higher, because there are parts of the economy that do not have the labor they need right now. But that is an issue of reskilling, retooling. It's a much deeper issue about the supply side of the labor market.
So what do you think the Fed does?
So I think the Fed does nothing.
In January, but then what?
I think we've probably saw the last cut in this tenure for Chair Powell. I think they will expect that they will think that, quote, well-positioned. You'll hear that phrase over and over, we're well-positioned to wait. And then the question becomes, how much influence does the next Fed chair have, and how quickly?
Do you think, we got 10-year highest since basically Labor Day. Rick was just talking about the 4.2 level. You think they're starting to test out, as they normally do, new potential chairs? Certainly a new chair once it comes?
You know, Carl, I've been very surprised by how range-bound the 10-year has been. There's been so much going on, but it is range-bound. And I think that has to do with policy, that people see policy effects on both sides, and therefore they're frozen into this range-bound trading. We need to see something breaking. I cannot stress enough how important next Tuesday's inflation number is. That is the focus now. The jobs report, as Sarah said, says, the labor market is fine. It's not great, it's not bad, it's fine. How about inflation? And the UMISH number, where, as Rick said, it's stuck pretty high up there, is really suggests that we should focus on this inflation number.